Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 4th, 2026, and we're diving into Aflac's fourth quarter earnings report for 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Aflac has been a significant player in the insurance industry, and their latest earnings report provides some interesting insights into their performance and strategic direction.
Revenue and profitability overview. Let's start with the top line. Aflac reported total revenues of $4.9 billion for the fourth quarter of 2025, which is a decrease from $5.4 billion in the same quarter last year. Despite this, they managed to achieve net earnings of $1.4 billion. John, what does this tell us about Aflac's profitability?
While the revenue has seen a decline, Aflac's net earnings of $1.4 billion, or 2.64 per diluted share, indicate strong profitability. This is supported by their strategic focus on cost management and investment gains, although these gains were lower compared to the previous year. Additionally, the company has reiterated a 5.2% increase in their first quarter dividend, reflecting confidence in their financial stability.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $1.71 for Aflac, but the actual adjusted EPS came in at $1.57. How should investors interpret this discrepancy?
The adjusted EPS of $1.57, which is slightly below the forecast of $1.71, reflects a 0.6% increase from the previous year. This shortfall can be attributed to variable investment income, running $12 million below the company's long-term return expectations. However, the slight growth in EPS suggests that Aflac is maintaining a stable earnings trajectory despite external pressures.
Segment performance, Japan and U.S. Let's delve into the segment performance. Aflac Japan reported a 15.7% increase in sales for the quarter, while Aflac US saw 4.0% growth in net earned premiums. What are the key drivers behind these numbers?
Aflac Japan's impressive sales growth is largely driven by the strong performance of their new cancer insurance product, Miraido. The pre-tax profit margin for Japan was 31.3%, slightly down from last year. In the U.S., the 4.0% increase in net earned premiums reflects improved sales, particularly in group voluntary products, although the pre-tax margin decreased to 17.4% due to higher benefits and expenses.
Strategic initiatives and future outlook. Looking ahead, Aflac has been active in deploying capital and launching new products. They repurchased $800 million in shares and introduced a new medical policy, Anshin Palette. How do these actions align with their strategic goals?
Aflac's capital deployment through share repurchases and their consistent dividend increases underscore their commitment to returning value to shareholders. The launch of Anshin Palette, along with other products, is part of their strategy to target new and younger customers, particularly in Japan. CEO Daniel P. Amos emphasized their focus on creating long-term value and maintaining strong capital management, which is evident in their strategic initiatives.